What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is February 21st of 2020. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, I not only want to talk about why I believe towards the end of this year, sometime in the fall or winter of 2020, we are not only going to see Bitcoin back above its previous highs, but along with that as well, see Ethereum well beyond $1,000 per coin. And I want to explain not only on a fundamental basis in the sense of what's been going on in the cryptocurrency space, but also taking a look at the data as well as price action. So without further ado, let's go ahead and take a look at it right after our quick sponsor. Our sponsor for today's episode is TaxBit. The IRS recently released new forms in 2019 that require all taxpayers to attest to whether or not they traded cryptocurrencies, no matter if they made gains or losses. TaxBit automates your cryptocurrency taxes, enabling you to effortlessly track, calculate, and report your transactions. Easily connect your exchanges to securely sync your transactions and run them through TaxBit's tax engine. Generate your completed tax forms with a single click. Founded by tax attorneys and CPAs, TaxBit is the most trusted cryptocurrency tax solution. Get 10% off your tax plan today with a free trial using promo code DataDash. Alrighty, everyone, so I want to go ahead and get started in diving into our topics for today's video, but I know some of you might have been concerned about the recent pullback that we had in Bitcoin as well as altcoins, and quite frankly, guys, I'm not concerned. Bitcoin has already regained a lot of the losses from this pullback, and not to mention as well, a lot of our altcoins have not only done the same, but have gone back to continuing and outpacing Bitcoin, as we've seen a little bit of a decline in Bitcoin dominance over the last 24 hours. So again, if you take a look across the board of the market, crypto markets generally confident, regaining back, getting some buyers buying on the pullback, right? All right, so let's go ahead and talk about these longer term time frames, the fundamentals, and why sometime by the end of this year, I do believe we are going to see ourselves above 20,000 for Bitcoin as well as 1,000 for Ethereum. Very simply, right? So let's go ahead and just talk about this. So first off here, we're taking a look at a long-term chart here on the weekly time frame for Bitcoin on Coinbase. Now, we're taking a look at the logarithmic chart here, and we can see here that there's a very significant line of support back here from the last cycle in 2015 all the way here to 2020. And then a significant line of resistance taking in the last two significant highs that we really have to work with. There's really not much price action to work with in the sense of resistance. We have here the highs of December of 2017 from the previous cycle, and then the highs here at a near 14,000 for Bitcoin back in the previous run up here back in 2019. So if we're taking these two into mind here, we have this line of resistance that lines us up here, somewhere around 12,000 if we were to test up the price range relatively soon, or somewhere around 11,000. And a support range that, again, both of which are coiling in for either a massive breakout or a breakdown to the downside, all right? This is what wedges do, right? This is a general standard wedge here on a very long-term time frame. And it's very significant to take this into mind because what I think is happening here is very similar to what we've seen on both gold and silver. So I'll go ahead and just demonstrate that here before I draw on the chart what I think is going to happen. Just for some context, we can see here gold. If we take a look here on the non-logarithmic chart, the standard chart, we can see here that we had a long-term line of support, long-term line of resistance between the significant highs and significant lows. And we can see here what happened was that gold came above here, and it didn't just start a massive rally out the get-go. It had a small pull up here, and then it had to pull back to test and see if it can make previous resistance support. This happens a lot in markets. You have to see whether or not it's going to actually be able to hold off the breakout, and if there's buyers coming in. And in this case, we got that, and then the rally started to kick off big time, where gold has been outpacing equities and other traditional assets. So this is what we want to look for here. And the same thing is true for silver, just in a different technical pattern, but a very similar nature of basically making previous resistance support. We'll take a look at the monthly here. We can see here that silver finally broke past a descending line of resistance, got above here, and for a multi-month basis held above it, and is now starting to curve up and look like it's going for $20 an ounce, $25 an ounce, and even more over the next year. So this is a good sense of context here. So I want to go ahead. We'll go ahead and dive back into the Bitcoin chart. For those of you who care to look at crypto markets, we can see here, if we take a look at the weekly, we're getting very, very close. So what's my general estimation of what's going to happen? So we've got all the way here to 2021 here. This general time frame is when I'm predicting we're going to see Bitcoin above 20,000. A much more modest prediction than I think some people have. And it basically has to do with accounting for the halving event coming in. It has to do with the sheer fact that we're seeing a growth in the HODL waves for Bitcoin. And it has to do as well with the fact that we're far away from being anywhere near anything significant in the sense of new all-time highs. In this case, we're breaking out to what would be the peak for the next cycle, right? You know, we talk about multiples for Bitcoin with each of these cycles. So our target of a 5x, which is very humble comparative to previous cycles, which would lead us to 100,000, we're nowhere near that, right? So let's go ahead and draw this out. So I think that generally speaking, we're going to see a continued rise here. I think we've seen enough of the pullback here, this 10% decline. And what we're going to see is we're going to test up here over the next coming weeks towards around 12,000. We'll pull back, and eventually we'll break above here sometime in the spring. But what's going to happen is we'll get above here, and we're going to bounce back and forth like we did with gold here on the previous resistance, and eventually start moving higher here for price or Bitcoin, or really start to pick up and break out towards all-time highs. Now, this is a general kind of time frame here. Again, guys, I don't want to be too specific on, for example, my line here draws towards September, right? That doesn't mean I think it's going to happen exactly in September. It doesn't mean price has to exactly follow this. But I think the nature of what you're going to see is we're going to continue to coil in through here. We're going to stop testing this line of support and show the eagerness through price, the bulls coming through and pressing price higher, setting higher lows away from this line of support, and pressure to break above this resistance and then make it support and continue the rally. That's what I think is very easy to have. I think this is a very easy case scenario for Bitcoin. I don't think this is overly optimistic. And not to mention as well, the halving event is happening back here during May. So what I think would be a very interesting scenario is to see us back above here in May and see if through this point in time, if we hold above resistance, the halving is providing enough buy side pressure in this case, or discrepancy, enough of a discrepancy between the supply and demand, the cut in supply of new coins, as well as the continued growth in demand of Bitcoin's price. So that's what we'd want to look for here, all right? So again, just a general kind of case scenario here in the sense of price. Good news here for those of you who like to look at things like the fear and greed index, we're actually into a period of fear here, right? After all this great gains here in market price action, we were never really overbought. That's the funny thing. If you take a look compared to what we saw back here in the previous cycle. So I think we're just in the first steps of this continuation of price after the over 50% correction we had in Bitcoin's price. To give you guys some context, right? Even if you take it back to where we were back in mid-February, where it seemed like everyone was so bullish and altcoins were starting to pick up, the fear and greed index was only picking the mid 60% range. If you take a look back here, that's like where we were back here, where Bitcoin was sitting around 4,000, right? So we've still got a ways to go if you're looking at the fear and greed index for context, right? So this is when we're getting overbought here, when we're pushing up towards 90 to 100%. We're still down here in the fearful part. We're down towards a neutral zone of around 50%, give or take, right, between these little off and on periods for Bitcoin. So we haven't even seen the momentum kick in yet. Another thing as well, stock to flow model, halving coming up here sometime in May. Because of that, we've definitely got to see, we're going to definitely see, again, even if it's a delayed response, if we're looking at our time frame here, this is where 2021 is. So right here, the fair value model here for the stock to flow would be $40,000, give or take, right? So we're estimating around that time period, price should be chasing towards that goal, right? And we saw in the last cycle here, right, where we had the halving event here. Again, if you guys don't know how to read the chart, just to explain it, the color here represents the days until the halving. So you can see this is where we had the last halving event, and this is where we had the last halving event. So when it jumps to orange, that means it's already gone through. And we can see here that, of course, if we take a look at the last previous halving event, there's a little bit of a delay here where the halving event plays catch up here, right? Because it takes time for that supply and demand shock to start really reflecting in price and then spawning that next parabolic cycle where retail and institutional waves come into the price. So what I think we'd see here sometime by the end of the year is easily somewhere around 20,000. If anything, maybe we'll need an extra month or two to get to 20,000. We might be sitting at 18,000, whatever it may be. But again, guys, that general kind of range is something that's very realistic at this point, okay? So it's just something to keep in mind. Another thing as well is just taking a look at the logarithmic growth curves here, guys, right? We're on the lower end of this oscillator between the long-term line of support and the long-term line of resistance, right? And again, give or take here, the midway line that we're looking at here, right, is roughly around 20,000. So I don't think this is too crazy to estimate that we're going to be anywhere near this price range relatively soon. So again, just something to keep in mind, and it wouldn't mean that we're excessively overbought at 20K, right? Now, this has been taking a look at Bitcoin here, right, guys? We're taking a look at the longer-term chart, the SMS indicator, signaling confidence here. If we get anything like we did last time, this is going to continue through and process much higher, much quicker. But the major thing I want to talk about is also Ethereum as well, right? Bitcoin is not the only thing I'm confident for. I love Bitcoin. I think the Bitcoin is going to be a multi-trillion-dollar asset by this next cycle, right? We're going to press towards anywhere between $1 to $2 trillion. But along with that, we also have what's going on in Ethereum, and not only with Ethereum 2.0, but also the DeFi space. So let's just go ahead and talk about those fundamentals before we dive into price. So for those of you who don't know, Ethereum is looking towards doing a massive network upgrade over the next coming months. They're estimating sometime this summer. And ETH 2.0 is basically going to introduce two major upgrades. It's going to be making a migration from a proof of work consensus mechanism to proof of stake, and they're also going to be integrating a form of sharding, where they basically pair a variety of different validators or people who are running full Ethereum nodes or staking a certain amount of Ethereum to be able to cluster together and be able to validate certain sets of transactions. So these two things are going to help scale Ethereum quite massively. It's going to get to a point where at the current pace of where we're at right now with the growth of demand for transactions in DeFi and the useful applications in the DeFi space, that Ethereum will be able to provide that layered framework in this case where every transaction can be settled on chain. And not to mention as well, not everything is being validated in the previous way that it is on chain, where it's taking a very long time, where everyone has to update the ledger and that everyone would have to run this excessive full node with a ton of transactions, right? So it's a very, very big upgrade for Ethereum. If Ethereum can do this properly and Ethereum can actually get these features integrated, it is going to mean a big set of changes in scalability for Ethereum, and this will allow them to start to work on things like privacy and a lot of other elements that are really key to taking blockchain, specifically Ethereum's blockchain, mainstream in the long term for both enterprise and for DeFi use cases. Now, I'd recommend watching this video from Vitalik. He explains that actually quite well, and you can find it here in this recent CoinDesk article. But again, the exciting thing here is that ETH 2.0 will not only help scale, but there's a big set of confidence here that it's going to be coming out sometime this summer. They're estimating for July here. Some of the major developers here are kind of penciling in a date sometime in July of 2020. But again, this fits into our normal time frame here. If we're having a $1,000 price range target for Ethereum, if we can get this kind of scaling in, and we can actually start focusing on a lot of the bigger picture things, but more than anything, focusing on providing the cheap transaction costs for DeFi applications, this is going to be huge, guys. It's going to be massive for the space, and I'm really excited to see this for Ethereum. After a long time coming, this has been something they've been working on for a long time. And not to mention, I think every single day, another value proposition is not only just realizing the growth in DeFi, but the day-to-day kind of big headlines that are showcasing that this new emerging space is functioning and it's working. The other day, where we had one of the worst attacks we've had in the DeFi space, which was a few $100,000 lost in a flash loan attack on Ethereum between a variety of protocols. A DeFi insurance platform, Nexus, in this case, was able to give out and make out its payouts for insurance policies. So we've talked a lot about decentralized exchanges. We've talked about decentralized lending pools, all these really unique features in the DeFi space. But one thing I haven't talked a lot about is decentralized insurance. And it's a lot more simpler than traditional insurance policies, where you're having to talk to someone. You get a specific insurance claim, and again, though that has a much more wider range of market exposure to different kinds of markets you can cover for. What this platform Nexus has been able to do has been able to provide insurance for a variety of smart contract protocols. So if you, for example, had your money on Compound, for example, which is a smart contract where you're earning interest on your money, you could actually take out an insurance policy with Nexus Mutual Firm and basically be able to cover in case that, let's say, oh no, the smart contract had a bug and all the funds are lost and Ethereum doesn't roll back the chain and you lose your money forever. No worries, you can put some money aside into an insurance policy to cover yourself. And that's the really cool thing. And they just actually made a payout to those who were harmed in the BZX attacks. So it's awesome to see here, guys. And you can see, generally speaking, the overall DeFi market is growing. In fact, this dip here that we saw recently over the last few hours is actually DeFi Pulse having to remove the API data for the amount of ETH being held from the Nexus Mutual company. And the reason why is because there was actually an error in how they were reading the API in this case. And it was reading as if they'd pulled out a large amount of Ethereum, but in reality, it hasn't actually happened. So the space is growing here, the longer term trend here, guys. It's awesome to see. Now, I want to go ahead and talk about Ethereum here because we talked about this in our newsletter back in January. I was writing this back in December, but how anywhere down below this green line I was eager to buy in, but also if we got it in the golden range, which sadly we didn't in this case, I was buying into Ethereum. And so far, it's paid off big time here. We've gone from around $112 upwards towards $266 for Ethereum. So really good to see. Now, we're not even above the previous relative highs here for Ethereum back in 2019, and we're still far away here from our highs at 1400. So I think it's very, very rational to think that sometime here in the next coming months, we are going to see Ethereum back towards its previous, not only towards its previous highs, very close, but up here towards $1,000, right? So this is my target range here. If we take a look at the last cycle here, it was over 35 weeks that we went from down here at 80 bucks all the way here to 1400. Just for some perspective here, taking a look at the longer term chart, and we'll go ahead and just try to focus in here on price. So I copied that exact 35 weeks, and this sets us up for somewhere in the summer if we did an exact repeat of the last cycle. Now, I don't know if we're going to get that. In fact, I think it might push a little bit further, and it really depends as well. Sorry, I didn't mean to grab that there. I meant to expand the chart, right? You know, it could go all the way up here to the start of the next year, but the major thing to take into mind here is that we're not shooting for up here. We're shooting for a much more humble price range of around 1,000. So that's down here, right? We've already made a good amount of those gains so far. And along with that, we've got a much longer term time frame to do so. So that's why I have my target of $1,000. I think it's actually, again, a very humble figure compared to some of the estimates people have. And after that, I think Ethereum's going higher. I think it's going to 1,500 and likely 2,000 in the next cycle. But again, I'm going to be waiting patiently to see if DeFi keeps expanding. I'm going to see where we are in the sense of the market in the next couple of months. I think $1,000 is a nice target range here for the shorter term time frame. Again, you know, some of you might say, "Oh my God, you know, the end of 2020, that sounds like a long period of time," but it's really not. It's a very, very short window of time, guys. We'll be there sooner than you think. I mean, not saying that in a meme. I'm saying it in a very comical way. Like, time flies. You know, we'll get there eventually. And I think we can see here with the confidence that we've seen in the altcoin space from projects on the Ethereum network, like Kyber Network. Kyber Network right now breaking out to relative all-time highs here, and well, relative highs. Again, if you take a look way back, then you'll see we've been here before. But in the sense of this cycle, we're pressing up with absolute strength here. Link holding well above that breakout on the ascending triangle. Litecoin as well. Starting off the initial phases of its longer-term cycle, we dipped below a long-term range where we enter in. This is the general resistance range, so we've got a long ways to go there, in my opinion. We've got a lot of other plays. You know, again, some of these plays here still far away from where I want them to be, but again, I'm still confident here. If we take a look at Bitcoin dominance, right? Bitcoin dominance rolling back over here. It looks like it's not showing any signs of strength. If we really look at this on the shorter term time frame, I usually don't like to do this. We can see here still lower highs here, right? And it's a matter here of whether or not we get a break below the generalized support here and collapse back down to the range of where we were. So you'll see in the next day or two, guys, if we really do continue this and if altcoins continue to carry it out. I think Ethereum will continue to lead the way in a lot of manners compared to a lot of plays. So I'd like to hear what you guys think, though. I've rambled on enough today. If you guys like the points that I brought up, from the fundamental talking points to the technical talking points as well as the data science, drop a like. And if you have a comment on something that we talked about, please leave a comment down below. I'd like to hear from you guys and get a discussion going. But until the next video, I hope you all are having a fantastic day wherever you are. Until then, I'll see you all in the next one. Stay tuned.